What we're going to be having now, this is from idea to investment. It's navigating the world of game development, funding for first-time developers. So this is much more of that startup side of things. And the first talk we had was much more about VCs and bigger funds and further raises. And this is much more about the start funds. And this man here has both invested and raised, I believe.
Yeah.
So you've been all over the place.
I've been everywhere. I've done everything. I've been everywhere. And yeah. Anyway, enough of that. They're probably much more interesting people to talk to in terms of investment. In fact, not probably. We all know these guys know what they're doing. I just play at it. Anyway, thank you very much for being here. Thank you very much, guys, for being part of this. Obviously, the way this particular panel was pitched was around talking about how we go from idea to investment, particularly for first-time investable people. But I think we want to try and paint a wider picture, because I think we have a whole spectrum of amazing people who've been involved in all kinds of projects at all kinds of scales. And so let's explore that. But let's do that sensibly. So let's start with Arnold. Do you want to introduce yourself and talk about what kinds of things you're interested in, what kinds of things you invest in?
So hi everyone, I'm Arnold from Capricia. The fact that I'm on an investing panel is really funny, to me at least, because originally we were a metal band that somehow became a studio. But we did sign a bunch of deals with investors, government funds, small companies, huge companies, and even somehow ended up investing ourselves. Yeah, we started making metal albums as games.
That's very rock and roll of you.
Yeah, that was the beginning. Yeah.
So what kinds of things are you looking at right now?
Actually, nothing.
Nothing. Fine? Yeah?
No,
okay.
we're
not
like,
interested.
We're at. I have. This is like a magical moment in the company's life where you go to a conference and you go like, I'm good.
Fair enough.
But for like 7 years, we were begging for money, and yeah, I think we've done all the angles of.
But this is an interesting thing, is like just realizing that people go through various stages of their careers or their experiences at these various stages. So Ilya, do you want to tell us about you and what you do?
Hi, my name is Ilya. I'm one of the co-founders and the managing partner of the Games Fund. So we professionally invest in video games companies, and I'm in video games business for close to 17 years, so since my teenhood, and for the last 6 years we invest in video gaming companies. So we invest in content creators, so both mobile and PC console developers, and technological companies developing tools, services, middleware, and other stuff somehow related to video games.
Thank you. Stanisław, tell us about yourself.
Hello guys, my name is Stan Fiedor. I'm the founder of Fuero Games. That's why I guess I'm here, because starting from bootstrapping back in 2012, the studio was founded and we had some VC's investment, we got some government grants, we closed publishing deals, and angel rounds, and so on and so on. So we've been through all of the possible steps of basically raising the capital to actually make the studio up and running, which I imagine it's at the very early days the challenge, and that's the way of how you make it till the next month, basically, right? Very often until you get to the big hit. So I've been through all of those moments, and last year the company was like around 20 million USD revenue. So that's growing, basically.
Hi everyone, I'm Tarek, Fouad, partner at Shorooq Partners. We're a pan-regional fund manager, managing over $500 million of assets under management. We invest across sectors. I lead on the gaming side. And totally excited and interested in meeting founders, building the next game or the next software solution or streaming and social platforms out there. So please reach out and grab a call.
Brian.
Brett Krause, one of 3 general partners at Transcend Fund. We're an early stage VC. We differentiate ourselves that we're operator investors, so all the partners have made games ourselves and we add them all up, and we have made over 60 games across nearly every platform and genre. So we come from the investing angle as operators, having been in the seats of game makers. We also tend to be very early. We've got so many years of experience. Shanti and Andrew, my partners, 25, 30 years in the gaming industry, having hired several thousand people. We have kind of very deep network. So we're always looking for great founders, repeat founders. We've invested in over 30 companies in our 2 funds. And as we look across all the cap tables, there's nearly 300 co-investors at some level. We can count less than a dozen that were earlier than us. So we tend to be the first round pre-seed, seed investors. So that's Transcend.
Again, incredible team as well. I mean, like I say, if you think about the whole spectrum of the people on the panel, there's an amazing amount of talent here. So why am I here? Well, obviously I come from a different range of perspectives. Firstly, I run a living game publisher, so we're about engaging with games teams, but we don't fund. What we do is we work with funding teams who do essentially finishing funding. So we basically have created a model where game studios can get finishing funding as a revenue share model rather than an equity model. But we're also people in the middle of trying to develop software as a service platform. And so I'm pitching to some of these guys separately, independently, as many others, to do that kind of tech platform as well. So I look at it from all the kinds of perspectives and find the whole area fascinating. So we talked a little bit about who we are and what we do. What's the kind of investment? So obviously we can talk about equity, we can talk about a whole bunch of project-style funding. There's a whole bunch of different techniques of funding. In particular, what sort of deals do you tend to get involved with?
So we are kind of proud of the fact that we've never given company equity ever, and we got a bunch of investments, so it was always project-based. We did buy a team, so we kind of invested in another company, so it depends from which side, but it's, yeah, like as a company. If we get an investment, it's usually for a project.
But if you were giving investment, what would you be looking at? Was it the same sort of thing, or is it just if you were receiving it?
Yeah, so for us, it's, so again, we're an indie studio that kind of, okay, pretty big for indie,
yeah,
at least in Israel. But when, again, in the few times that we've invested, it was always like growing the studio. So the idea was to bring a company and kind of eat it, or
yeah,
like a team, usually small teams.
So more an M&A style in some ways then.
Yeah, so what we did, for example, is like we still let them, work on their product and what they were doing, but under like our umbrella and bringing them into the family, this type of thing.
Ilya, what about games?
Yeah, so on contrary, we only invest in equity, and we're trying to see beyond the single game, beyond the first game. And for us, the project the company is working on is just a validation of the founder's vision. Yeah, it could be a win, but even if it's a lose, if it was a mistake to create this project, but founders are able to learn some lessons out of it and able to keep moving the company forward, that will be good enough for us. And you can only achieve that through investment in equity in the company, not through some product financing. But nowadays, when we kind of shifting our focus a little bit towards the PC and console and cross-platform projects, we kind of trying to be open-minded with an investment model as well. So in some cases, we invest in kind of combo or proxy deals, like when we have some equity and we have some share in a project profit. So usually, kind of large-scale AA gaming companies require more capital to deliver something. So, and we don't like super pumped valuations at the first rounds. So to be able to provide enough capital to the company and get a sensible valuation, that's combo deals come into place.
So if I'm understanding right, you're looking at the valuation of the company, but you're also paying attention to what the capital needs of that team are to get to the next valuation. Is that a fair summary?
Yeah, absolutely. Yeah. And to get here, you can come up with different models and have a combo deal, like half of the capital should be invested in equity and half of the capital should be invested as project financing. Yeah. That could be a solution for these cases.
Yeah, and I think that's a fairly unusual model, but I think it's a really interesting one. Stanisław, from your point of view, what sort of deals are you looking at? And are you looking at project side, investment side, various other aspects?
Sure. Maybe I gotta say, like, because I've seen at the venue and like at the conference many startups raising out or coming from this region and building over here and so on. And I assume many of you guys think like, okay, how do we actually make it? Or some of you maybe have the idea, right? Maybe you're engaged somewhere and want to start something. So I may be just going to share a couple ideas how you can actually make it happen to establish a studio, right? So sometimes there are the cases that you can be having your day-by-day job and accumulate some capital over there and start bootstrapping after hours some first project, because on that way, from your daily job, you gather the experience, you gather the know-how, and you still get the money, right? Because when you start the startup, it's basically you spend the money all of the time and don't get anything at the very beginning. So it's good to have like some, let's say, safe money pillow there coming from, for example, from the daily job, right? So that's first option. The second one is like to gather some small funds and from your friends, family, and so on, where they know you, right? So you're vetted by them, so they know that they can put in some money. So you are able to basically have some kind of prototype, something to show, because right now the market, as you've seen in the previous presentation, it's getting tougher to raise, right? So if you come to an investor and say, hey, Ilya, I have this amazing idea, but I have nothing else, right? Then you're gonna say like, yeah, come in like in a year or two when you have something, right? So that's the whole thing. You need to be able to showcase something unless you have 15 or 20 years experience in the industry and a team of veterans as well, so that and a bunch of friends in the industry who can say like, okay, you do something new? Okay, shut up, take my money, that's it, right? So if you're starting...
Tell me where those people are. I need those people.
Well, yeah, that's not easy. That's why, going back to the earlier stages, basically being able to create some kind of prototype, something that will be able to showcase what do you have, what's like the unique element, right? But try to have at least one thing that's going to stand out, right? That's the next step. And then there are a couple ways you can find additional money. You can look for some angel investors, right? Where they're just going to write some checks because they're going to see some potential in there and potentially
Actually,
something.
I think we'll come back to that in a,
Yes.
This is one of our later
And then we go,
questions we're going. So,
then
sorry, I'm going to come back to you because I think I'm right in saying you're more equity side of the space. Is
No,
that
so
fair?
we do equity, and we do a combination of equity and token.
Okay. A token, yeah.
Yeah. So for Web3 games, we obviously always look at also that side of the business, and we're happy to do a combination of both. But it's important because a lot of what my colleagues here have said are everything that all investors would say, right? I don't think it's any news to you guys. I'll be looking at an A+ team, amazing content or original content, experience, and having traction. I think all of that is important. What I want to just leave the audience with, especially founders that are hearing us here, is that even if you have all of those, there are other considerations, right? Such as, fund deployment time, ticket size, region limitations, fund portfolio management and allocation that might not necessarily go into a specific gaming company. And you might have all of those ticked, but we would still not invest. And that has nothing to do, per se, by you just ticking the boxes. So it's kind of important to remember there are a lot of other areas that you might not necessarily see that are at the back end that would be affecting that decision.
I think that's a really important point because we often talk about, we've got to get the pitch right and all that kind of stuff. And often it's not even about getting, even if we got our pitch right, we're not going to get signed up by that particular person because we don't fit in that particular box.
Yeah. But, obviously, if you're coming from a game development side or a game studio, what we look at is very different from if you were a software company doing the next live ops or DevOps platform. And it's even more different if you're building a streaming or a social platform. So it's quite important to kind of also realize that different business models and platforms do require a different eye. But at least if it's game development that we're speaking about, we definitely want to see original content, and most importantly, IP. I think there is many people out there that are building games, and video games will be video games. But I believe firmly that IP that could potentially transcend being just a video game lives forever.
What a perfect segue.
Thank
You just said the word transcend. Sorry, I could not take that.
That was planned.
So Brett, from your point of view, I mean, I'm going to particularly go, because you like to be in so early, and it seems to me, and again, I think you're more equity than project-based, if I remember correctly. Does that not represent some specific challenges as well, in particular what Ilya was talking about in terms of valuation and what the capital to deliver from that pre-seed stage to get to the seed stage, to get to the Series A? How do you look at that?
Yeah, we invest across kind of all platforms and games. We've invested in PC, console, VR, mobile, and core technologies. Trying to find those amazing repeat founders is key. You can see their hit rates are so much higher. They usually have not only the experience, but they can also attract the talent to follow them into a new venture. But that does come with a challenge, because the best founders will typically get 8 or 10 term sheets. And if you get the folks on Sand Hill Road that really want a particular investment to lead, they'll bid up the price. So that is why our network of kind of 30 plus years in the gaming industry, we try to get to find those founders. We track them very carefully when their earnouts are done or when they're thinking about doing something, so that you actually get in earlier. And if you can do that pre-seed round, you can get in. We have a couple of cases where we've just kind of preempted a bidding process by working with the founders very, very early, helping them formulate their business, putting in a convertible note, say a couple million, and then converting that into like a $5 million note as the first seed investor, and then bringing in, a couple cases recently. We had one of the biggest Asian investors. We did that model, and they came in with a $20 million check and took the whole seed round. But we were in at kind of the pre-seed. Or we have another case where an amazing founder that's twice had multiple $100 million exits had us come in at the pre-seed round, and then together we were able to get project finance of more than $30 million of non-dilutive capital, which kind of came in. So then that just really leverages our position. So
just for the purposes of the audience, in case they don't know what a convertible note is, could I get you to quickly explain it?
Yeah, so when you start off just trying to figure out what the valuation of a company is, next to impossible to have a real sense, particularly if it's very, very early. You've got an amazing founder with a vision, clear differentiated product, know what they want to do, really have very granular idea and understanding of their audience. They know how they're going to attack it. All those things come together. You still can struggle at the beginning to price the value of the company. So you'll put in a convertible note or a safe note and basically just punt that down the road. You'll get a discount for a future round. And if you put in $1 million or $2 million, something like that, into a convertible note, they start to build out a AAA team. They're going to go back to the market and they're going to raise within a year probably. So at that level, if you're confident in yourself, you can price the round and lead the subsequent round, in which case your previous note converts at a discount. You get upside in it, or otherwise you let someone else come in that has big ticket and willing to price around, and then you go and you follow them in the subsequent round. But it's just a mechanism to not waste a lot of time early on debating the valuation of the company. Get the founders capital, help them build the company, and put the valuation some months or a year down the road.
And in some territories, this has a tax benefit as well. There's, and particularly in the UK, I can't remember what it's called, it's like a FAST or something, but they have specific tax benefits for the investor to do that particular mechanism. There are other tax-specific frameworks, particularly in the UK. I'm aware of that, obviously, intimately. So in particular, we've got what's called an SEIS, so a Seed Enterprise Investment Scheme, and an EIS, which is just the Enterprise Investment Scheme, both of which mean that people who invest effectively get significant reductions on their tax costs, and also they get, if that particular project succeeds, they don't get capital gains tax off the back of it. So there are other frameworks other than just equity and project finance, some of which also have tax benefits, which you as a recipient may not have anything to do with, but you need to be aware of, because it's going to make it easier for that investor to pay attention to you, because they can take advantage of those tax benefits if you fit the regulatory framework. So, Arnold, come back to you. So we've talked about the kinds of investment, whether it's equity or project or like the convertible note style. Let's say you're looking at a project. What's the thing you need to see to get you excited and to take it seriously?
Well, I always tell studios that are like starting out that, you know, the ideal investment for, I'm going to talk about the publishers for a second, right?
Sure.
Is a game, like a team that is very experienced with a game that is good and is ready to launch tomorrow, right? Like that's a deal that any publisher pretty much would take.
It already makes money and I don't need any work.
Yeah, like no, we can be realistic, you know, it's like, okay. So, and the worst, and a lot of studios are like that, at least in Israel, is like, you know, I have a great idea. Our team comes from like video editing and whatever, but we're gonna make an awesome game.
It's Skyrim meets Magic the Gathering. It's gonna be amazing.
We need like 5 million, and we're gonna launch in like, you know, 4 years.
Yeah.
So wherever you are on that scale, like the better, because I think in the previous panel they talked about the fact that like funds will spend money, right? Like you have a bunch of money you have to spend in the next 2 years. Usually that's how this works, and they're just like, it's a matter of competition. That they will invest the money. It's a question of where, and the where is the closer you are to what they want to see.
So from what I'm hearing, it's you need them to know what you're looking for to understand that it's the thing that you want. Is that, that's a terrible summary, but is that kind of what you're saying?
What I'm saying is that like there is a scale. So like, you know, you need to make sure that you're not pitching something that is clearly very far away, needs a lot of money, and you don't have the experience to do, which I know because that's what we were doing. And you know, obviously if you have a great game launching tomorrow that doesn't need any money and a great team behind it, then you can get amazing terms and get the deal signed in a week, right? Yeah. So what I'm saying is like, I think studios need to realistically understand where they are on this scale, yeah. And it's a very hard thing to do because like, especially if it's first time raising capital, it's like, I know we had no idea, you know, where we are on the scale, and we were surprised that we're getting no's, and nowadays I'm like, well, like I wouldn't invest in this, you know.
So Ilya, for you, what's that one thing you need to see?
First of all, I wanted to add some comments on what Tarek said about that. Even if you ticked all the check boxes and you kind of formally comply with all the requirements from the venture fund, it still could be a no, just because it's not a good fit on some, you know, on some personal or, you know, emotional level. And you should, you know, founders should not consider like getting investment or getting rejection as a win or lose, because it's not a lottery and it's not a, you know, competition in this sense. And if there's no good match, it's more like a dating or something. And if some person like formally, you know, comply with all your requirements, like being a blonde, blue-eyed, like decent height, something like that, it still could be a bad match, or, you know, it's not your soulmate. And we expect our founders to be our soulmates and share our vision for the future. And it's maybe it's hard to formulate, but you can feel it, and you can sense it when you talk to someone. So that's kind of should be a slight shift in how people approach investors and how people, you know, perceive the investment process. So then, to what we're looking for when we invest in some company, as I mentioned before, the most valuable asset in the company is the founder. So we're looking for founders with winners' mindsets and founders who are willing to fight for their company if they, you know, find themselves in some kind of troubles. So they not will be relying on some third party, that some big brother will take them out of the trouble. They should be self-sufficient persons, and they should fight. They should fight for their business, and they should feel themselves as owners of the business. That's why we never take a controlling stake in the company, and we never invest in companies where some other investors like have controlling stake in the company, and founders have like 20% in the cap table. That's just not for us. They are kind of founding employees with some incentives down the road, but they are not founders. At least that's what we believe in. And in terms of the product, we target kind of potential leaders in a niche. So for instance, we invest in some racing game developers. We expect them to, at some point, to be the leader in the niche, the leader in the market. And as Maria mentioned on the last panel, we expect every investment from our fund to be the potential fund returner. It's ultimate statement, but it's not always like that. But it's some, guiding star that we chasing when we are making our investment decision. So strong founders, kind of psychologically sustainable founders who are able to resist the harsh environment, and some ambitious project that potentially could be a big hit. Maybe a big miss and total disaster, that's fine, but we don't chase in mediocre founders and mediocre ideas.
So it's passion and grit, kind of two key factors that come out.
Yeah, so starting from last year, because I had a little bit more of time when moving from the CEO to the supervisory board, I started also to support some early founders or teams where I saw the potential. And after I had some calls with them, I saw that the people, right? I think the most important part at the, let's say, angel stage or very early first rounds, etc. For me personally, the most important fact is the people, the team, the founders, because everything is going to depend on them. Very often, the startups, life is ups and downs, right? There's going to be different situations coming in, and sometimes they will have to pivot. They will have to change their strategy, maybe even the whole product, right? Because the first thing the first game might not be the hit, the second might not be, but the 52nd might be, right? Then there is about the determination, right? The passion, and if they are fighters, let's say, that even though it's going to be tough times, even there will be hurdles, they will be able to make it through it. And that's the other part is also values. If the founders are honest, trustworthy, because trust is super important. For me, if I'm gonna invest my time and potentially my money into somebody, then I must trust this person, right? And that's why I don't like beautiful stories, bullshit, and everything like that, right? I prefer people who are honest and say whoa, this is our plan. It might be amazing, but it might also fail, right?
Absolutely.
Somebody who is aware of also the troubles, the hurdles that might be on the way. Because if somebody just sees oh, it's gonna be amazing, we're gonna be the next unicorn and so on. Oh, but there's the competition which already does it, and there's the crazy
then reality strikes, doesn't it?
Yeah, so that's people. I think people, because the product might change, the situation on the market might change, but if there are the fighters, they will always get through all of those situations.
We've seen a whole bunch of surveys on what investors want most, and team is almost always the thing that comes
but
first,
then
foremost,
the second thing is there must be also something about the product, about the game, at least one USP, something that's going to stand out. Because if you have already so many games on the market.
So please explain what USP is. And I'm going to be really mean on it because it's
it's
big bugbear.
unique selling point.
Yes.
So basically
unique.
something.
That's the key word. Unique.
Yes, unique. Because that's going to be something that, hey, we are all gamers, we played games and we've seen many, so there needs to be something that's going to be that's interesting, or okay, I've never seen that, or I would like to try that, right? Because then it's, okay, now you got my attention, right? And then there is the interest, then there might be the desire to invest, and if after the so-called DD, so the due diligence, checking all the papers, everything is fine and so on, there might be an action to actually invest, right? But that's, I think, the two key things that are important for me.
I think they're massive. Tarek, I'm going to kind of be mean and bar you from saying the word team. Because
Yeah,
we'll take that as a red.
No, absolutely. No, so I think they said enough about teams.
Yeah.
But what I would want to bring attention to is, thinking as an investor at every single point and as you grow, what we're looking for is de-risking this investment, right? And as a founder, if you're able to take us through a journey on how did you decide about this storyline or this game or this genre, and why are you doing certain things in a certain way? Why did you decide to, let's say, tackle a certain market before expanding to another market, or maybe go ahead with PC instead of mobile? There has to be decision-making process that took data into consideration, took experience into consideration, and you telling that to the investor gives that trust, that ability for them to understand that you've thought about all of this, right? So it's very important to showcase from a founder's perspective, how are you de-risking that investment, especially if it's an early stage investment, coming at a pre-seed stage. We all know that it could fail, but what's important is that we put in steps or milestones or mitigations to kind of avoid that from happening. And then finally, I can tell you what we, at least us, don't want to hear founders say. We care less if it's blockchain, token, what is it called, dollar, big, or whatever it is. And unfortunately, it turned out to be all these entertainment, fun products that keep people engaged, to these technical products that end up on tokenomics from page number 1 and gas fees and whatnot. Like the user, the end user, the player at the end care less whether it was built on Solana or Sui, right? I think it's important that we go back to basics as an entertainment product. How do you put it out there, and how do you package it for investors and for players?
Why should they care? Why should players care? For me, that's the bottom line. If you can't explain why players should care, why should I care about your game?
Absolutely.
Brett, obviously, we talked about our team. Do you want to add to that? Is there a particular area? Or the other option is to switch to talking about the biggest mistakes you've seen. I'm happy for you to take it how you wish.
I'll start by just, people have made a lot of great points.
Yeah.
There's a couple things that I would add. Transcend is an audience-led investment fund. We always are looking where the audience is. So it's really important to understand the founder and the game's audience fit. That's the only thing that really matters. So it's to anybody building a game, make sure you really understand that audience and find a sustainable, long-term growing audience. That's a starting point. And that's the beginning for kind of all of our investments. A couple of other things that you don't really know exactly what makes some games amazing, but you can feel it when you're meeting the founders. And they tend to have a couple of characteristics that I don't think have been mentioned in detail. One is they will really, really know their product. They'll know their audience and they'll know their vision. So typically when we're making investment, we're spending 10, 20 hours with the founding team before we make an investment. A first screen is 30 minutes and then an hour, and then you actually get into depth. And because we've made so many games ourselves, we tear the games apart in great detail. And it's pretty clear within kind of the second or third hour if people don't really know, haven't done their homework. So, the best founders will say, oh, that's a good question, and I have a slide for that already. They've thought 10 and 30 questions deep into the game and the genre and the audience and acquisition, all the fundamentals. They really, really are prepared. And you'll find quickly people say, I don't know, and you're like, well, that's really critical fact. You should have known that before you started. And then the other thing I would just highlight, I really like founders that have kind of strong views, loosely held. So they're still humble enough to think my vision could be wrong, or I may need coaching and I may need to listen to someone else, whether it's their VC or it's an advisor or someone else. And so that ability to be coached or to kind of have a vision out there selling it, but yet still be humble enough to recognize that you could be wrong, because making games is really, really hard, and even great people struggle to do it repeatedly. So I think that those are just kind of the keys. It's not really about the team, but it's the depth of the team, their vision, and whether they've got that audience fit.
I really applaud that way of thinking, particularly for me, because although I do advise some companies, I'm an advisor for AudioMob, but I also have a couple of advisors, one of which is Phil Mansell from Jagex. So I feel kind of privileged that my friend, who happens to be this guy who runs this big company, will listen to me on my woes, and every once in a while, someone like him or Nick Brown, who's our other advisor, will just say, "It's okay, Oscar. You know what you're doing, it's okay." And just hearing someone else tell you, even though I've got 26 years of experience doing it, I sometimes need to hear somebody else tell me it's okay. Right, so we only have a few minutes, I believe, left, so I'm going to have a quick run through. I need a very simple, very quick, I know this is terribly mean of me. What's that one mistake that turns you off? Oh, we're actually out. You're not going to let me finish the last question? Up to you. One more. It's only, so, like I said, really quick. What's that one mistake that turns you off straight away? So, really quick answer, if you don't mind.
Coming to investors too early, which usually also comes with a bit of a disconnection to reality. I'll call it.
Yeah,
I think that's.
I do love super early approaching stuff, so I encourage people to come to us as early as possible, and we give second chance and third chance. But the number one mistake is people they don't think about how we make money out of this venture. So they just focusing on creating a good game that they will enjoy playing, that people would enjoy playing, but they don't care much about how make money out of this game.
I'm thinking also about doing a proper investigation about the competition, the market itself, because very often there might be some passionate founders and they have like, oh, I have this idea for the game, it will be amazing and so on. But they don't check if, okay, what's going to be the whole situation with getting the users into it, the user acquisition cost, and so on, which builds it up to the whole business and can break it down, even though you're going to have a great product, but you won't be able to attract the users and you won't be able to break even, so generate more revenue from the player, then it's going to cost you.
And 5 games of exactly the same genre were launched last year and all failed.
Biggest mistake would be not knowing your business really, really well and not approaching investors way early into the cycle. Don't come to the investor when it's done. You need to build trust. And trust can't happen when you need the money tomorrow because it's going to die.
I think the biggest mistake that most investors make is just following the hype or the crowd. You've seen repeated hype cycles, Web3, now it's AI, metaverse. There's a lot of comfort in investing in things that others are saying is important. But having a very clear vision, understanding an audience, stepping away from what's happening in the macro picture. I think there's a reason why Warren Buffett is so successful. He lives in Omaha, Nebraska, and there's no one anywhere near him that gives him any opinions that are relevant. He just is clear on his own, thinking about what he wants to invest in. And I think that if you spend too much time following market trends as opposed to thinking about what really is going to resonate with an audience or what's really fun, then you're most likely to make a mistake.
I don't think that's a reason not to do some of that stuff. For example, I think there's some value in generative AI. However, the only reason to do is if you've got a very specific and absolute definitive reason why that is the right approach. And you've got to be able to communicate that well above the hype language, because it's so noisy. If you can't communicate why this is the approach you're taking, irrelevant of the trends, then you've got no argument anyway. It's just, I've added blockchain, therefore give me money. Who cares? In fact, I think that's the sum up I will give. It's like, if you don't know how to tell people why they should care, you're not going to get anyone to bother investing in you. On that note, thank you very much, guys. Much appreciated. Thank you for giving us the extra time for the question. I hope you all enjoyed that. Thank you.